right, welcome back. This is it. The last time we're getting together. You might like that, you might not like that, but last time we're going to see each other going into the close here. This is about the last segment of the day, but it's not the last time you're going to see me. You're going to stick around to the top of the hour, 1 Central, 2 Eastern. The Cow Guy close. I've got the script in my fat little hands right now, so it's hot off the presses. We've got a lot to talk about. It's going to be a great show. 3 great guests again. So that's 1 Central, 2 Eastern, the Cow Guy close. But until then, we got to go through some of these numbers, and these numbers haven't been that great today. We'll see if we've got any changes, but let's start with corn. Let's see what corn's got in store for us. Let's bring that board up behind my head. Well, July's down 11 cents, to 585.5. And that's what, 4.5 cents off the lows and about 10 cents off the highs. That's going to give you an idea about where we've been. Deese, the new crop, that's down 10.75 cents to 5.19. It's pretty much laid here for the last 2.5, 3 hours. It hasn't done much after that. Let's talk about what's going on in soybeans then. That board kind of hurt. Soybeans hurts a little bit more. July's down 17.75 cents. 14.16 is last there. 5.5 cents off the lows. New crop, no, 16.5 cents lower there. 12.56, and that's 5.5 cents off the lows there. So 12.56 and Novi new crop. Ouch. All right, moving along. Chicago wheat, the wheat in Chicago, 12.25 cents lower in July. 6.41 is last there. And we've got a Deese market that's 12.5 cents lower. 6.70.5. There you go. All right, moving from Chicago wheat to Kansas City wheat, the hard red. This is higher. This is good. July's up 8 cents now. 8.52 is last. And that's a penny off the highs. And we've got a Deese market that's up 3 ticks, 0.75 cents to 8.31, and that's 3.25 cents off the highs there. So hard red wheat, kind of a little bit of a comeback, I guess we could call it. How about spring wheat in Minneapolis? It's a little bit of, let's go bifurcated. Big word. July up 1 tick, 0.25 cent, 8.44 even as last. Going out the deferreds, though, all the way out to, say, even Deese, 1.5 cents lower out there to 8.47 3/4. Now, we have to take a quick peek, as much as I don't want to. Cotton's not looking too good today, folks. 218 points lower in that July contract to 81.12. And then we've got Deese down 186 points to 81.14. Now, we can get back to our guest analyst, or get to our guest analyst. That's going to be Ted Seifried, Zaner Ag Hedge in Chicago. Ted, thanks for joining the show on this Tuesday afternoon. Is there anything you can glean from those numbers that I just gave you that's going to make anybody feel any better?
Well, I don't know about feeling better, Scott, but what I will say is this. We had kind of 3 things sort of come together to affect us here today. One, we had that cancellation to China of corn. That's the 3rd big cancellation. Makes you wonder how much more is to come. It doesn't really make you feel good about export sales in corn going forward, even though we really need to see quite a bit more to hit the USDA's target. 2, you've got the analyst expectations for this report that we're going to have on Friday. And when you look at the new crop balance sheet, the expectations for almost a 2.1 billion bushel carryover in corn, and a bushel carryover in soybeans for new crop, I think maybe caught some people by surprise. Those of us that don't sit here and do balance sheets all day, every day, I do, but most people don't. I don't think we're expecting to see such big carryovers for the new crop, i.e. this whole tight supply situation may be coming to an end without a pretty major weather issue. So that was kind of a bit of a rude awakening for the market. And then just in general, planting is going very quickly. So we don't have anything to say, well, okay, yeah, but this is a problem for that yield and everything like that. Well, we don't have that yet. Not saying that we won't at some point during the growing season, but at least for the moment, things are going really rather well. So in most areas, yes, there are exceptions to that, obviously. But from a national scale, planting's going quickly. The prospects are good. So you've got a lot of pressure on the market. Now, I wonder if maybe we're pricing in the bearish expectations for this report on Friday now. And so that might be better. If it is a bearish report, we can take it with a bit of a grain of salt. Maybe you find some buying after that. Because again, we still have to grow this crop. So either way, it's a heavy day. It doesn't look good on a chart, but we have a report on Friday, and, at some point we might just want to go sideways.
Yeah, you're right. I mean, I think it feels like we're getting ready for that report, and the chatter has been negative. So if you're long, there's going to be a reason to get out, and if you want to buy it, there's not a reason why you'd want to buy it. So that's why the market goes lower on when we have issues like that. But yeah, I appreciate that. All good stuff. Great content. Stay right there, though. We need to go away. We're going to pay some bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge in Chicago after this. All right, let's clean it all up with some good news going home. Let's talk about what we've got going on in the livestock, the meats, the proteins, whatever you want to call them. I'm wearing a cow jacket. Let's take a look at live cattle. Let's take a quick peek at what those prices are doing, and they've gotten a little bit better throughout the day. June's up $1.10 up front. 163.52 is last. That's a time off the highs. Let's go way out to February. 77 cents higher up there to 173.87. So I'm going to call live cattle a good board. Let's take a look at the feeder cattle board, though. Well, here we go. Almost $2 on everything across the board. Let's go to August. That's up $2.30 to $225.40. 57 cents off the highs. We like that, right? November is up $2 itself to $2.32, and that's only 35 cents off the highs out there. So feeder cattle gaining some strength, as we go through the close here today. That's a good board. So those we're 2 for 2 on good boards there. Now, this has been the one that has been hard as of late, but not today. So this is a good way to finish everything up, isn't it? June's up $1.20, 84.50 is last there. That's 20 cents off the highs. October's up 82 cents to 78.75. And that gives me a good segue back to our guest analyst. Bring back in Ted Seifried, Zaner Ag Hedge. What do you got? We got about 45 seconds.
Well, you are indeed wearing a cow jacket, Scott. Good for you. Yeah, like I said, livestock board is good. Feeders are the leaders in the cattle complex, which, hey, surprise, when you got corn down 12 cents or so, the feeders want to find a little bit of strength, and that's good. That really helps that chart out as well. Bouncing off a key support. We talked about a lot. I think that we really get into grilling season. Getting warmer. I think you're going to have to see cash cattle come up a little bit further. I'm looking for higher trade in the live cattle. The big surprise is hogs finding some footing. I said hogs I think are undervalued for quite some time, but they haven't really responded to that. Maybe this is the beginning of that. This longer, broader bottoming formation. I don't know. We'll have to see.
Yeah, I mean, there's a lot to watch there, and you know how good bull markets make you hard to stay with them. I think that's what cattle's been doing to us the last few weeks. But anyway, appreciate that stuff. Great stuff. Ted Seifried, Zaner Ag Hedge. He's in Chicago. We're in Las Vegas, or not so Las Vegas, where it's raining.
Vegas.
It's raining.